All right, well, let's get some global perspective in, and this is especially important with regards to flows. Cameron Brandt is Director of Research at EPFR Global. He's with us now to take some questions. Cameron, great to have you with us here on the program. Thank you very much for your time. Flows, Cameron, what's the latest picture for India looking like? GEM funds and India dedicated.
The picture, as it has been now for well over a year, is very positive for dedicated funds. Just closed the book on another week of inflows. For the diversified funds and what they signal about general appetite for emerging markets assets, that's less positive. We've had outflows from GEM funds now for the past 6 weeks. And investors really seem to have decided in the emerging market space that it's the large Asian markets and no others need apply. The thing that's been different since I last talked to you is that flows to dedicated China funds have started to rebound in a steady way. Prior to that, Taiwan and India dedicated funds were taking in the bulk of the money, but it's now being spread 3 and occasionally 4 ways when Korea funds have a good week.
Hey, Cameron, hi, good morning, and thanks for joining in. So for dedicated India funds, do you see more money pouring in the emerging market basket? Is there a chance that, India could continue to be at the top of the pecking order?
I do. I don't know if it'll be at the top of the pecking order. There's definitely some catch-up that is likely to occur with China, especially if the plenum meeting that they have in the 3rd week of July produces some tangible stimulus measures. But, everything I hear and see is that India is viewed as a long-term story, that it'll play out over a decade, this particular spurt of growth. There's still room, actually, I think, for the flows to India to improve. One thing we've noticed is that India equity funds domiciled in some of the major developing markets, such as Japan, the UK and US, have seen flows take off exponentially in just the past really 12 months. So the sources of support for India, I think, are broadening and diversifying.
Hi, Cameron. Good morning and good to see you. Let's talk about a couple of other asset classes then, like gold. I think gold was seeing a lot of inflows, and then suddenly now gold has pulled back in pricing terms. I think it's down close to 4.5% from the recent peak. How are the flows to an asset class like gold that was shining, but for the time being, it's consolidated a little bit?
Right. So we've had a sort of almost counterintuitive situation with gold, which is that certainly there's a lot of interest in gold, but people aren't looking to get their exposure through mutual funds and ETFs. And we've generally seen more outflows than inflows in the gold fund groups that we track. We have seen a bit of a diminution in risk appetite just over the past 2-3 weeks. And one reflection of that was that gold funds started to see some serious money. But as a general rule, it seems that a lot of investors, if they want gold, they're looking to actually get their hands on physical gold rather than sort of use a fund as an intermediary.
Got it. Cameron, we'll leave it at that. Thanks a lot for joining in, and appreciate your time here on CNBC-TV18. That's the Director of Research at EPFR Global, talking about the way forward in terms of flows and where India is positioned